It's time for On Point, where we speak to experts to delve deeper into some of the key issues in the spotlight right now. Along with many other countries, South Korea is also seeing a slowdown in its economy as it faces a number of issues like rising consumer prices, rising interest rates, and a supply chain disruption.
That's right, with the country also seeing its currency weakening against the greenback. What are some of these short and long-term effects? Well, to get an expert's take on the situation, we connect with Oh Joon-seok, Professor of Economics at the Sookmyung Women's University. Professor Oh, thank you very much for joining us this morning.
Thank you for having me.
So first and foremost, we saw the Korean won weaken to 1,300 won against the U.S. dollar just last week. Still remains the same right now. Is it solely because of higher interest rates in the U.S. or are there some other factors we're looking at?
We have to count many factors. Korea had 1,300 level, so-called debt cross experience in 1997 and 2008 financial crisis. Foreign exchange is simply the price of foreign currency. When the foreign exchange rate goes up, you have to pay more Korean won for getting dollars, which means the value of Korean won drops. Investors and companies want more dollars and take their dollar back from the global capital market, converting other currency denominated monetary asset into dollars. And then even though the investors don't doubt the robustness of a Korean economy, they thought now is a time of early harvest rather than invest, as to the risk management manual prepared before. Hiking interest rate could be one of the major factors because the United States Fed decision to take a giant step of interest rate would be understood as a strong and hawkish signal to the market. They will increase cost of borrowing up and up, along with tightening monetary policies. As famous safe harbor, under uncertainty, U.S. dollar popularity stems from risk averseness due to prolonged uncertainty in the economy. Other factors comes from U.S. inflation, growth outlook of the global economy, ongoing conflicts in Russia and Ukraine, and China's dynamic zero-COVID strategy. The reason that traders and market sentiment can keep relatively calm in Korea is those uncertainties comes from external economic factors, not a matter of internal economy of Korea. They come like a typhoon, which will pass by. And how long typhoon will stay, nobody knows, but the second half of this year might be tough for Korean economy.
Well, then, how much more do you think the Korean won will actually weaken against the greenback? I mean, there are some saying that it could even reach 1,400 won soon.
It might be the worst case scenario, but it will take time to recover its normal and stable range of Korean won changes unless external uncertainties were cleared away. The finance minister Chu voiced some concern about the falling won against the dollar. I totally agree that the outlook of weakening won has a psychological impact, spreading negative business sentiment in the market, vacuuming consumption and investment. Stock market turns into bearish and causes instability in the financial markets. I don't count, however, the situation of touching 1,400 level per dollar. While noting that won fell much further against the dollar during the late 1990s financial crisis, I was at that forefront foreign exchange dealing and analyzing the market situation at the time, totally different. The recent falling Korean won is not an exclusive situation, as other currencies have also been falling against the dollar. In this respect, it is expected a convergence of around 1,300 level would be maintained to the end of this year.
Professor Oh, some experts are saying, the U.S. is facing recession. Should South Korea be worried about a similar economic slump? I mean, what are the prospects for South Korea's economy moving forward?
No wonder that global foreign exchange market uncertainty is growing, not only rocking our own foreign exchange market significantly, but having a rippling effect in other economic areas. The government is forecasting 2.6% growth this year and 4.7% inflation, up from a previous estimate and far higher than those from international institutions. Korean won is the worst performer in emerging Asia this year, with a loss of more than 8%. As a result, investors tend to sell the Korean won denominated security, converting into dollars out of Korean capital market. Moreover, surging oil prices are also taking a toll on the won, not to mention of the Korean economy. As they push up import cost, Korea posted a first current account deficit in 2 years. Overall effect will be eventually reflected by Korean stock market fluctuations and the outlook of the Korean economic growth. And then overseas investors have already sold a net of $4.2 billion of local share of this month. So I might say the Korean economy might be not that bright to the end of this year.
All right. Thank you so much for your insights today, Professor.
Thank you.